if you're trying to use money that requires banks, you can't trust the banks, right? You certainly can't trust the banks in Africa, in South America, and most of Asia. It used to be Americans thought they could trust American banks. Now they're realizing that they can't trust American banks. So the first order impact of the banking crisis is people think, well, maybe the money I had in the bank's going away, and so I ought to put it in a bank in cyberspace that isn't controlled by the government or by the bankers, and that's Bitcoin. The second order impact is the solution to the banking crisis is print more dollars. And if you print more dollars, the actual monetary inflation rate goes 10%, 15%, 20%. So why do you think those bonds crashed? Because they're actually claims on dollars. Do you really want to hold $1 billion of Zimbabwe dollars? What if I offered you 10 billion Zimbabwe dollars? I mean, the answer is it's going to a nickel, okay? So if the paper currency keeps crashing, then you can't own anything that's currency related. You can't own a currency derivative. You need to own something that politicians can't print more of. Okay, well, that's oil, that's land. But the problem is, try hauling 100,000 barrels of oil from where you are to London, where you want to be. How are you going to do that? I'll give you $1 billion of land in Central Africa, and then someone takes over with machine guns and declares that everyone with large amounts of land now loses it. That happened in Zimbabwe. You're going to pick up the land on your back and carry it to France? So it's simple. If people lose faith in the banks, they lose faith in the currency. When they lose faith in the currency, they lose faith in the government. When you lose faith in the bank, the currency, and the government, and someone says, what can you trust? The answer is you can trust Bitcoin because you can custody your own asset, you can run your own node. And at the end of the day, even if the Chinese want to shut it down, they can't. If the Russians want to shut it down, they can't. If any nation state wants to shut it down, they can't. If the US wanted to shut it down, they can't. And so everybody wants something that they can trust that is beyond the reach of a corrupt politician, a corrupt corporate executive. They don't have to be corrupt. They can just be well-meaning, trying to do the right thing in a misguided fashion and meddling with your economic life.
If there's ever been a time for you to make that argument and make it aggressively and scream it off at the top of your lungs is right now, especially the fact that 3 out of the 4 largest banks that ever gone out of business in the history of America were done in the last. You got WAMU was the biggest, which was September of 2008, 307 billion. First Republic was 212 billion. That was May 1st. Silicon Valley Bank, March 10th, 209 billion. Signature Bank, March 12th, 110 billion. And the next one, closest one to it, is IndyMac. If you remember, IndyMac it was only a $31 billion company back then in 08. So someone may be listening to this and say, oh my God, man, this guy's right. Maybe I ought to start moving my money out of my bank as soon as possible. You know, Jamie Dimon, I know these guys are trying to get people not to take their money out of the bank and have too many bank runs, because if they do that and, you know, some are taking their money out of their bank and putting it in the money market, is Michael saying take my money out and put it in Bitcoin? Or are you saying maybe take it and put it in a bigger bank? So are you saying that these 3 out of 4 largest banks that went out of business, there's more to come and things are going to get uglier than what it's been last 90 days? Or are you just saying the fact that if you keep your money in the bank, at any point they can make that decision and control your money?
I'm saying that money is a store of value, and there are multiple monies, and they're not created equal. So let me give you the world's worst money. The worst money in the world is like Argentine pesos or Venezuelan bolivars or Zimbabwe dollars or Nigerian naira. Weak money. The official inflation rate in Argentina is 105%. But that's the official rate, which is that understates it. The actual inflation rate would be higher. And if the inflation rate is running 100%, that means your money is losing half of its value every 12 months. That means that within 10 years, you have nothing. Okay, so bad currency or bad money loses all of its value over the course of a few years. In Venezuela, you lose all your value in 36 months. In Argentina, in 10 to 20 years, the Argentine peso was 1 to the dollar 21 years ago. If you had $1 million 21 years ago, the Argentine peso right now is about 480 to the dollar. So that's not a 99% loss. That's a 99.8% loss, right?
In how many years?
21 years. Okay, so what I'm saying is you don't have money if you have weak currency. Now let's take strong currency. Well, the strongest currency in the world is the dollar. That's not money. You're losing 99% of your wealth over the course of 90 years in the US dollar, maybe more. The only difference between the US dollar and the peso is whereas it takes 20 years to lose your family's fortune in the peso, it takes about 90 years to lose your family's fortune in the dollar. My house in Miami Beach was $100,000 in 1930. It was appraised at $46 million a few years ago. Do the calculation. It's on a path to be worth $100 million, which means that the US dollar will have lost 99.9% of its value over 100 years. Warren Buffett knows this. Charlie Munger knows this. Basically, the bottom line there is your money in the bank isn't money. Okay, so the answer is you shouldn't have any money in a bank. You're basically losing 7% of all your wealth every year in a good year. If it's the dollar, you're losing 15% of your wealth in a not good year. If it's the dollar, you're absolutely losing all your money over the course of a decade. So that's kind of weak money. Awful money is developing world money, the Lebanese pound. The Lebanese pound got devalued. I mean, you would have lost all your money in 5 years if you had the pound. The strongest money, decent money, okay money was gold, but not great. The strongest money in the world is Bitcoin because Bitcoin is absolutely capped at 21 million. It is global money. You could take $1 billion of Bitcoin across a border. You can transfer it to a counterparty and no government can interdict that and nobody can inflate that. And so my answer there would be you can't trust any bank. You certainly can't trust a bank in Lebanon. Read about Lebanese banks. You can't trust a bank in Africa. You can't trust a bank in Asia.
Michael, but if you call Chase, their customer service is amazing. How is the customer service with Bitcoin when you call the 1-800 number?
Bitcoin is a bank in cyberspace run by incorruptible software. It's going to keep your money. If you are incompetent, then you're going to suffer the consequences. But let's think about what banking executives in the U.S. do. The U.S. banking system is the best in the world. Here's what they do. You put $100 billion into the bank. They have the deposits. They turn around. The Federal Reserve interest rate, short-term rate, was 0. And these guys went and invested $100 billion of those deposits in mid-dated, long-dated sovereign debt that was yielding 1.8% interest. The Federal Reserve took the interest. Would you loan me money for 30 years at 3% interest rate? Like, can you imagine that? If the inflation rate was 8 or 10%, would you loan money out at 3% interest rate for the rest of your life?
Not in a million years.
Okay, that's what the banking executives in the U.S. did. Not just the ones that went bankrupt, right? There's a host of banks. I think they had, like $800 billion of unrealized losses or something. A host of banks went, and anybody that bought mid-dated or long-dated bonds at the bottom of the market when interest rates were 0, they were loaning out money forever at 2% interest or 3% interest or 1.5% interest. And as soon as you redeem, what happened, of course, is the Fed raised interest rates from 25 basis points. Actually, the rates went from 0 to 500 basis points in 12 months, about. That's the sharpest increase in interest rates in memory. That in itself is, I'm not going to say what it is, it's just horrific, terrifying to think that any public servant would do that. But it's equally terrifying to think that if I was your money manager and if you had given me all your money when interest rates were 0, and I said, well, I guess interest rates will stay 0 for the next 30 years, and so I'm going to loan it out as a bond and lock in a price of 2%, you would have thought I was crazy. No, there is no individual, no rational corporation, no economic actor that would loan money forever for 3% interest when inflation is running double or triple that. So the question is, who would? And the answer is a bureaucrat, either a governmental bureaucrat, someone that is coerced by regulatory policy where they're forced to. For example, a bank can't buy Bitcoin, but a bank is almost obligated to buy treasuries. So the politicians create a set of rules that strongly encourage you to do certain things and strongly discourage you to do other things. And generally, they encourage you to do the thing which is probably least economically viable. There are probably local organizations and banks in foreign countries that own their own local currency, right? Like, would you buy, an African currency with an inflation rate of 200% a year? No, but people do. Why? Because the government controls or owns the entity, and so they force that. What I think happens to the banking system is all of the regional banks, the small, mid-sized banks, are at a massive disadvantage right now because the government is showing that they're not going to bail out those equity holders. So there's a migration of deposits from the small banks to the big banks. The JP Morgans, the Bank of Americas, the mega banks will continue. They'll be just fine. They'll be supported by the government. The small banks are going to struggle, and that's what you see going on right now. If you're a depositor, you'll probably get bailed out by the government. If you're a bond holder in the bank or an equity holder at the bank, you won't get bailed out, right? And so there's a crisis for investors. Whereas everybody that's a depositor doesn't want to sit around and take the risk. Who wants any anxiety? So I think that to the extent that you rely on banks, clearly the world is waking up. The U.S. is waking up, and they're thinking, I want to be with big banks. I wouldn't have my money in a bank anywhere outside the U.S. in a weak country, right? You need to be in a rich, strong country with a rich, strong bank. With regard to what individuals should do, I think the logical answer is for expenses, if you have expenses in the next 3 months, you have your expenses in the local currency, which is the peso, the naira, the whatever, because it's legally obligated for you to pay in the local currency. For the next 3 years of expenses, or 1 to 3 years of expenses, you put your wealth in the strongest world currency in the world. That's the dollar right now, but you make sure that you have that currency either self-custodied or you have it in a bank that you trust. That's hard. If you can't find a bank, if you were in Lebanon right now...
Can we trust you, bank?
If you were in Lebanon right now, you wouldn't put your money in any bank. You would actually put it on the Bitcoin blockchain. For any amount of money you want to keep the rest of your life, if you want to give it to your kids, if you want to actually retire on it, anything that's investable asset, you would put it in Bitcoin. You would put it in the strongest possible world currency, the global money, and that's Bitcoin. You're not going to get rich investing in dollars, and you'll lose all your money if your dollars are in a weak bank, and if your dollars in a strong bank, you'll just get poor slowly. You're going to get poor rapidly if your money is in not the dollar, but a weaker currency, and you're going to get completely bankrupt if you trust a weak bank. And so MicroStrategy, by the way, we had like $90 million. We had $4+ billion worth of Bitcoin. So go figure, right? 98% of our assets are actually in the strong money. 2% is in the world's strongest currency in a good bank and one of the big 4 banks. And that's about as much exposure as I want to a currency. What I'm saying is the 29% ARR is the risk-free cost of capital in the crypto economy. And the way you get to that number is Bitcoin's been going up about 55 or 60% a year for the past 4 years. It's been going up a little bit faster before that, but right now Bitcoin's appreciating 60% a year. The S&P index, which is the conventional cost of capital, is more like 14, 15% a year. So you've got like a 4x difference. The mainstream economy is plus 15 points. Bitcoin is 60. They're going to converge. As Bitcoin gets to the size of the S&P, when it's 100 trillion or 200 trillion and it's close to the S&P, it's going to be 1.5x the performance of the S&P and 1.5x the vol. The VIX, which is the S&P volatility, is about 15. The ARR is about 15. Bitcoin's like 60. And you can figure it out from the law of large numbers. When Bitcoin's a $100 trillion asset class, it's not going to be as volatile. And of course, at some point, companies in the S&P are all going to hold Bitcoin. And so like, if MicroStrategy gets in the S&P and Tesla owns Bitcoin and other companies, if Microsoft starts buying Bitcoin, pretty soon the performance of Bitcoin is going to goose up, is going to improve the performance of the S&P, and then Bitcoin's going to converge. Bitcoin's always going to be more volatile because it's 24/7, 365, and it's always going to be higher performance because it doesn't have the risk factors of property or companies and the like. That's a very useful chart. You can pretty much understand the world if you focus on that, which is if you capitalize on bonds, you're minus 5%. That's why all the banks are struggling, and that's why operating companies can't accumulate capital. Because what that's telling you is that if you're using bonds as capital, it's toxic. It's sucking 5% of your life out of you. And look at the cost of capital, 15%. So here, if you use bonds, you're minus 20% versus the S&P. That means that it's an awful way to build shareholder value. If I asked you, do you want to hold $100 billion of cash in bonds and you're Apple or Microsoft, the answer is no, because it's minus 20%. You might as well just give it back to the shareholders. They put it in the S&P index. But now look at the other side. Bitcoin is 4x that. So if I said you could put $100 billion into bonds or $100 billion into the S&P or $100 billion into Bitcoin, which of the three charts do you want? It's pretty obvious. You take the 60%. So what MicroStrategy did is we capitalized on Bitcoin, which is 60%, and then we levered it up with cheap convertible debt and equity raises, and we got to 120%. And that's how we ran 30x. Like, that's why we outperformed NVIDIA. Like, we're 2 or 3x NVIDIA over this time period, because we're actually capitalized. Now, coming back to the idea of growth, look, the big idea here, there's $450 trillion of money invested in bonds, invested in real estate, invested in equity by wealthy individuals, families, and institutions, and it's just for a long-term store of value. People that are wealthy just want to stay wealthy. People just want to keep their money. So they're buying these store of value assets from the 20th century, and those store of value assets, they kind of bleed 3% energy because of famine and hurricane and war and inflation and competition and obsolescence and accident and torts and unions, and fill in the blank with all the things that cause your investment not to work. That's 3% of 450 trillion. That's like 10 to 15 trillion dollars of entropy, of chaos every year. So the big idea is Bitcoin is just here. The money is just running from the 20th century to the 21st century. It's moving from physical space to cyberspace. It's moving from the finance space to the digital economy, the analog to the digital. What we're saying is sometimes the most lucrative thing you can do is do nothing. That is to say, I'll give you an example. You have $1 billion, you're in Africa, and I tell you, you can go and invest in anything in Africa. You got to hold it for 30 years. I'll give you 1,000 guys to analyze everything. Or you can buy $1 billion of Bitcoin. And you're like, well, the $1 billion of Bitcoin is doing nothing. I'm like, yeah, you're keeping the $1 billion forever and you're doing nothing. The $1 billion invested in Africa is I'm taking Egyptian risk. I'm taking Zambia, Central Africa risk. I'm taking Nigeria risk. I'm taking risk on that ranch. So most of the time people have to take risks and then they got to worry about it. Bitcoin is risk stripped away from the capital and inflation stripped away from the capital. So when I evaluate any investment, my view is, okay, well, is it going to give me a risk-free 29% ARR? By the way, coming back to that, it's like 60% ARR collapsing down to like 20% over 21 years, and the average works out to 29%. And the assumption is the dollar supply keeps growing at 7, 8, 9%. And then you get an additional gain because we invent robots and AI and flying cars. And so the actual S&P index is growing because the US prints more dollars. But it's also growing because we invent obscenely cool, useful things like the iPhone or like an electric car. So the future is good, but at the end of the day, Bitcoin's future is just pure digital capital. And I look at it as, why don't I just keep buying something going up 29%? All I got to do is borrow the money or raise the money at a cost of capital less than 29% over 21 years. You could buy Manhattan real estate every decade for 300 years and always pay more than the previous guy paid, and it would still be a good idea. And that's because it's the greatest city in North America. Yeah. Everybody wants to do business there. There's a limited amount of land. It's a perfect rock, limited amount of land. So there's never a bad time to buy Manhattan.
But even if you look at this though, Louisiana, we bought it for 15 million, APR 6.3, payoff 12 trillion, California 1848 for 18 million, 7.78 trillion, Alaska for 7.2 million in 1867. It's a trillion, 7.8. You're saying Bitcoin's going to be 240 trillion in 21 years.
Yeah.
Just very easily, the way you say it, it's not a big deal to you.
I mean, look, the takeaway from that slide is the key to getting rich is by scarce, desirable property. Pay for it with fiat. I mean, how much is a guilder worth today? Like, pay for it with money you printed, borrow the money, We borrowed the money to pay for Alaska. I mean, the country was broke in 1867. We just fought the Civil War. But what did we do? This guy Seward had the vision to print a $7.2 million check, pay off the Russians. And so number one thing, buy the property. Number two thing, hold it for a long time, because it might not feel like much, but when you're compounding over 100 years or 200 years. So what do all those four have in common? Well, they're all something you would want to hold for more than 100 years. And so what is Bitcoin? Bitcoin is the next frontier. We've already gone as far west as we can go. Now we have to go to cyberspace. I mean, eventually we'll go to outer space, but we're waiting for upgrades in propulsion to go to Mars and the asteroids. But between now and then, you go to cyberspace, and the real point is Chinese billionaires, Russian billionaires, African billionaires, South American billionaires, every company on the planet would rather have their money in the US, but they can't get it to the US. So where else can I put it? I can put it into the city of Bitcoin. I buy Bitcoin, I sell Africa, I sell Venezuela, I sell Russia, I sell Siberia, I sell China, I buy Bitcoin. Bitcoin is digital capital. Everybody wants it. Everybody knows about it. No one can steal it from you. And what's the use case? Well, the use case is to get rich or stay rich, which is like half of everything. The great irony is people can't figure out what it's good for. It's like for the last 10,000 years, people have been trying to figure out how to get money and keep it. What it's good for is the wealth that allows you to power your family, your country, your company.